Tokyo newspaper, believed to reflect the government's views, claims America's State Department has mismanaged its affairs so badly that it has made an enemy of Japan.
There's so much talk about Japan right now.
Japan's economy was then the envy of other nations.
The Japanese economy seems to be doing pretty well.
In 1990, economists were predicting Japan's economy would surpass the US to become the world's largest. Markets were booming and companies were thriving. But instead, years of stagnation and economic challenges caused a dramatic downfall. With the Bank of Japan recently raising interest rates for the first time in 17 years, does this signal a turning point for the struggling economy? Or are there wider economic factors holding the country back? In this video, we're going to find out. But before we start, if you're interested in the economy and investing, be sure to subscribe to the channel and our newsletter, where you'll get exclusive access to a course on building an investment strategy to outperform the stock market. World War II left significant scars following the nuclear devastation inflicted by the US. But despite the odds, Japan transformed itself from a war-ravaged nation into a manufacturing powerhouse in just a few decades. From 1950 to 1970, the economy grew at an average annual rate of nearly 10%, enabling living standards to double every 7 years. By the 1980s, their economic strength had reached new heights. In 1985, gross national product stood at $1.3 trillion, or about 40% of the United States. And the market cap of the Tokyo Stock Exchange nearly equaled that of New York. Japanese companies dominated industries like automobiles, electronics, and semiconductors. Companies like Toyota pioneered revolutionary production methods like just-in-time manufacturing and continuous improvement, while Sony set new standards for cost, quality, and efficiency. And by 1989, Japan was home to the world's 10 largest banks and 9 of the 10 largest insurance companies. Many believed it was only a matter of time before it overtook the US as the world's preeminent economic superpower. Ezra Vogel's 1979 bestseller, Japan as Number One, captured the prevailing sentiment, arguing that the country had created a superior economic model based on cooperation, stability, and long-term thinking. This meteoric ascent was so remarkable that by the late 1980s, some even spoke of it as a new form of capitalism that rendered Western free market principles obsolete. But by the early 1990s, Japan's economic juggernaut came to a screeching halt. The bursting of real estate and stock market bubbles ushered in a period of economic stagnation that has now stretched into its third decade. The excesses of the late 1980s, dubbed the bubble economy, saw rampant speculation in assets like real estate and stocks. Fueled by loose monetary policy and overconfidence, prices were bid up to unsustainable levels. When the bubble inevitably burst, it triggered a debt crisis and a collapse in confidence. Banks were saddled with enormous non-performing loans, while companies were left with excess capacity and unsustainable levels of debt. The result was a plunging stock market, with the Nikkei down nearly 50% from its 1989 peak to September 1990, and an inescapable period of stagnation and deflation for years to come. Despite Japan's prolonged economic malaise, many investors have remained surprisingly bullish on its long-term prospects. While the country's struggles are well known, less appreciated are the pockets of value and resilience that have attracted a devoted following among global investors. One key factor is valuation. After decades of underperformance, Japanese stocks trade at a significant discount to their global peers. Currently, the Topix index of Japanese stocks has a price-to-earnings ratio of just 16 compared to 23 for the S&P 500. This suggests that Japanese equities may offer a margin of safety and the potential for outsized returns if investor sentiment turns. Japanese companies are also sitting on large cash balances, a legacy of the conservative financial policies adopted after the burst of the bubble economy. These cash balances provide a cushion against economic shocks and the flexibility to invest for growth. But in recent years, pressure has been building for companies to deploy this cash more productively, either through investments, wage hikes, or returns to shareholders. Despite investor optimism, there are some major headwinds that stand in the way of economic growth. And many of these headwinds, such as an aging population, slowing productivity growth and deflation, are gathering strength in the US and Europe as well. Japan's experience with an aging population is particularly instructive. As birth rates have fallen and life expectancy has risen, Japan's median age has climbed to 48, the highest in the world. Nearly 30% of the population is over 65, a share that is set to rise to 38% by 2050. This demographic shift has far-reaching economic implications, from labor shortages and lower consumption to rising healthcare and pension costs. Other advanced economies are following in Japan's footsteps. By 2050, the share of the population over 65 is projected to reach 26% in the US and 30% in Germany. This aging trend threatens to be a drag on growth as a shrinking workforce struggles to support a growing number of retirees. Slowing productivity growth is another troubling parallel. In the post-war decades, Japan's rapid productivity gains were the engine of its economic miracle, as it caught up to and even surpassed Western levels of efficiency. But since the 1990s, productivity growth has slowed sharply, averaging just 0.7% per year. This has made it harder for Japan to grow its way out of economic stagnation. Other advanced economies are also showing similar symptoms. Productivity growth has been on a downtrend across the OECD since the 1970s and has been particularly sluggish since the 2000s. This productivity paradox has persisted despite rapid technological change, raising concerns about a structural slowdown in the potential for innovation to drive growth. Even Japan's deflationary quagmire, once seen as uniquely intractable, no longer seems like such a remote prospect elsewhere. In the US, Europe, and many other advanced economies, inflation has undershot central bank targets for years, despite ultra-low interest rates and unconventional monetary policies. As populations age and debt burdens rise, the risk of falling into a Japanese-style deflationary trap cannot be dismissed. To be sure, there are important differences between Japan and other advanced economies in terms of culture, institutions, and policy responses. But the broad parallels in terms of demographics, productivity, and deflation suggest that Japan's experience may be less an outlier than a forewarning. Other countries would be wise to study Japan's struggles and adapt their policies accordingly. Despite the long shadow cast by its lost decades, there are signs that Japan may finally be poised for a brighter economic future. While challenges remain, a confluence of factors, from a resurgence of inflation to geopolitical shifts, suggest that Japan could be on the cusp of a new era of growth and dynamism. One key development is the return of inflation. After years of struggling to get prices rising again, Japan's consumer price index is now climbing at its fastest pace in over 40 years. While much of this reflects higher energy costs, there are indications that Japan is finally shaking off its deflationary mindset. Businesses are starting to raise prices and wages are picking up, potentially setting the stage for a virtuous cycle of rising consumption and investment. Japan is also benefiting from a favorable geopolitical environment. Rising tensions between the US and China have highlighted the value of Japan as a stable, reliable economic partner in Asia. Japanese companies are well positioned to benefit from efforts to diversify supply chains and reduce reliance on China. The Japanese government has also taken steps to bolster its economic security, from investing in domestic semiconductor production to tightening restrictions on sensitive technology exports. Another tailwind for Japan is the global push toward decarbonization. As a leader in energy-efficient technologies and renewable energy, Japan is poised to capitalize on the growing demand for clean tech solutions. The government has set ambitious targets to reach net zero emissions by 2050, spurring investments in areas like hydrogen fuel cells, electric vehicles, and smart grids. This green transformation could be a powerful driver of innovation and growth in the coming decades. There are also signs that Japan's corporate sector is becoming more dynamic and shareholder-friendly. Under pressure from investors, many Japanese firms are unwinding cross-shareholdings, divesting non-core assets, and increasing returns to shareholders through dividends and buybacks. Corporate governance reforms, including the introduction of independent directors and stricter disclosure requirements, are slowly but steadily reshaping Japan's business culture. Of course, Japan still faces significant headwinds, from its aging demographics to its high levels of public debt. But there is a growing sense that after years of drift and stagnation, Japan may finally be turning a corner. If Japan can seize this moment, it has the potential to once again surprise the world with its dynamism and resilience. Japan's economic story is one of both cautionary tales and glimmers of hope. Its meteoric rise in the post-war decades was a testament to the power of industrial policy, technological innovation, and social cohesion. But its subsequent fall into stagnation exposed the limits of those same forces and the perils of economic hubris. Struggles with an aging population, slowing productivity growth, and deflation are a sobering reminder of the challenges that await other advanced economies as they mature. Yet at the same time, Japan's resilience and adaptability in the face of these headwinds offer lessons in how to navigate an uncertain economic future. As Japan grapples with the legacy of its lost decades and the promise of a new era of growth, its experience will be closely watched by policymakers and investors around the world. For in Japan's story, we may catch a glimpse of our own economic destiny. If you enjoyed this video, be sure to like it and subscribe to the channel. And if you're interested in building an investment strategy to outperform the stock market, sign up to our newsletter where you'll get access to an exclusive course. Thanks for watching, and we will see you in the next one.